Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back on Discovery Watch.
John, the mood in the junior resource sector has slipped from despondency into depression, where the belief is that it is game over. On past Discovery Watch shows, you've included companies in which you have large positions. Some of these, like Scandium International, Nevada Exploration, and InZinc Mining, you believe have fundamentals that could yet pay out even as the Canadian junior resource sector goes extinct. But what if you're wrong? What if it does make a comeback? Tell us about other resource junior stocks you own big time and which you have mentally written off that might surprise you with an unexpected payday.
Well, Jim, that's an interesting way to put the current mood into perspective. It reminds me of that 5-year bear market which followed the Bre-X bust in 1997. And that period from 93 to early 97 was an absolutely fantastic discovery boom period when I launched my newsletter. But during that 5-year bear market, during which dot-com juniors replaced resource juniors as what the market was interested in when gold sank as low as 260, one of the stocks that I recommended to my readers and bought a lot of was Pioneer Metals. And what I liked about it was its focus on the exploration for uranium at the northern rim of the Athabasca Basin. And then they did a deal where they acquired all these sort of marginal projects from Cameco and spun that out as UEX Corp. And then the whole thing just sort of faded away. And it was in 2003, before things were really starting to cook, before that Chinese super cycle really kicked in. In disgust, I almost sold my UEX position because I figured, well, uranium's dead and management's given up exploring, nothing's really happening. But something distracted me, and when I turned again to look at it, the stock was trending up. And that was the beginning of the uranium 1.0 bubble that Eric Sprott helped engineer, and he had picked UEX as one of the stocks that he was going to acquire. Had lots of existing paper. You could buy it in the market. And that position that I had mentally written off because the bear market seemed to be going on forever, that ended up being a huge payday for me. And the stock by 2007 had hit $9, and of course I'd sold almost everything way too soon, but it was still a big payday. And then Pioneer Metals, the original mothership from which it was spun off, I got $1 for that position too when Barrick bought it out as part of its tussle with Nova Gold for control of Galore Creek. So yes, sometimes these positions that one bought for, what were the right reasons, but became stale, they can become future paydays if one's pessimism about the future proves to be unfounded. Now, the first one in this category is Uravan Minerals. This company I started following in 2011. It has been around for quite some time, never had a rollback, and it's headed by Larry Lahusen, who was part of that Ron Nedelitsky and Glenn Harper crowd from the 70s. He specialized in the Athabasca Basin. And during that 2005-2007 period, Uravan had run to over $2 a couple times based on uranium prospects that it acquired in Nunavut and in the Athabasca Basin area. But what caught my attention in 2011, sort of after all the crash, was this innovative exploration tool that Larry Lahusen had developed in conjunction with Kurt Kaiser, a professor at the Queen's University, which involved looking at the at radiogenic lead isotope ratios as a clue for hidden deposits at the unconformity in the Athabasca Basin. And sadly, Kurt Kaiser passed away in 2017 while taking his students on a snorkeling trip in Bermuda to look at how carbonate reefs form as modern coral reefs. And since 2017, Uravan has been pretty much a bust. The last drilling was done in 2016 on the Stewartson project. They had generated these targets on the theory that where these uranium deposits sit at the unconformity between the basement and the sandstone basin rocks, bacteria somehow manage to get down there, even if it's over 1,000 meters, and they literally live off the sulfides. They extract energy from the sulfides, and they produce methane, which these lead isotopes, which are the decay products of uranium, somehow manage to get attached to and work their way through the fabric of the sandstone, and at the surface, at the clay, they manage to stick to the clay particles. So their strategy involved walking through the basin, systematically collecting these clay samples, and using that Queen Special Isotope Lab to assay for the presence of these lead isotopes. And where the ratios was right, indicating, okay, this is coming from a uranium deposit, that became a target area. And they had a number of hiccups along the way with problems with the data. But in the end, it was like the work was funded by Cameco. They had the Stewartson Lake project. They drilled a number of holes. They didn't get that high-grade discovery that everybody wanted. And then Cameco said, well, we're stopping this. They turned it into a 75-25 JV, and it's been dead since 2017 because, of course, uranium has been below $20, and Cameco itself has put the McArthur River mine, the richest uranium deposit in the world, on care and maintenance in an effort to reduce what it's selling at a loss, because the supply coming out of Kazakhstan has absolutely killed the uranium price and the viability of uranium mines outside of Kazakhstan. So the whole industry has been limping along. There's no point in exploring for new uranium deposits if at least until McArthur River is put back into production, and that's going to require the utility stockpile from Germany shutting down its nuclear energy sector, the Japanese taking forever to get back online after Fukushima caused them to pull the plug on all their nuclear power plants, and we're still waiting for all those Chinese reactors to also come online and produce uranium 2.0. But until uranium 2.0 happens, uranium exploration is pretty much a dead sector. Uravan Minerals has about 44 million shares outstanding. It trades at 3 cents. It still has the Stewartson project. Larry thinks that the vectoring work that they've done will take one more deep hole to either make or break this as a new discovery, but that's not going to happen anytime soon. Their burn rate is really low. He owns about 20% of the company, and it's basically a shell. And he's out of ideas in terms of what to do, and realizes that in this market, nobody's going to fund anything anyways. So his hope is that somebody with a cannabis deal or something outside the resource sector will want to acquire the company. But to me, this seems like a hopeless prospect, because there are over 500 zombie juniors in the resource sector, which are all waiting to be severely rolled back and cleaned up, and they can be sold to a new group with no paper in the hands of anybody else. And the brokerage industry is busy shoveling out capital pools. There's five every month or more. So there's no shortage of shells available. So if, Jim, you are right that I'm wrong about this sector being permanently dead, and something causes a turnaround, well, this stock, in which I have a significant position, Larry Lauzon may wake up one morning and said, now I have a great idea, and suddenly there's money available to come in. The company is clean, and he has the track record to understand the difference between a good and a bad prospect. But for now, this is truly one of those hopeless situations, and within Kaiser Research Online, I've downgraded it to no spec value rating, because that's all that you can give to a company that for the foreseeable future is basically a shell waiting to be sold.
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, your Aven looks dead in the water because it hitched its wagon to uranium, and management is out of ideas as far as other exploration plays are concerned. Are you stuck at any resource juniors where management has lots of ideas but cannot get any market traction?
Well, one of the companies that I haven't really directly talked about, though a fair bit indirectly, is Eastfield Resources, which has been around since the late 80s and has never had a rollback and has less than 50 million shares fully diluted. It's headed by Bill Morton and Glenn Garrett, who are quintessential toiling geologists, Vancouver-based. They've been in this sector forever, and unlike peers such as Bob Dickinson and Ron Nedolitsky, they have never had that huge off-the-scale discovery that makes them able to raise money at the snap of a finger and give their stocks very high valuations. Yet this little Eastfield company has spawned 4 other juniors through projects that it has generated, and what they do is they usually farm out the project to other juniors, and then when one of the projects starts to connect, they spin out the minority interest into a separate company, and they've got 2 of them left. One of them is Consolidated Wood Jam, which owns a copper gold project in central British Columbia that Goldfields explored before declining gold and copper prices killed that interest. Goldfields now owns just under 20%. That's an optionality play. There's some enriched gold zones within the overall copper system that perhaps should be looked at for possible higher grade gold zones, but that one doesn't really cost them much to maintain, so it just sits there in the stable. The one in their group that we have talked about on Discovery Watch is Caribou Rose Resources, and it also has a bunch of projects, and it's kind of annoying because Eastfield and Caribou Rose, although run by the same team, they seem to compete with each other in terms of acquiring prospects and then farming them out. And I've told them, you really need to have just one company in which generates the prospects. So you got to get rid of Caribou Rose or merge it back into Eastfield or do something. The project that we have talked about is Canadian Creek, and it sits to the west of Western Copper's Casino Copper Gold project, and that's at that advanced feasibility stage, and it's basically waiting to be bought out by somebody. And to the northwest is the Coffee project for that Gold Corp acquired when it paid $500 million for Kaminak. They drilled Canadian Creek in 2017. There's a nice geochem anomaly suggesting that there's a lot more going on. This is a project which the junior in this market cannot possibly fund. It sits below a nickel, and what really needs to happen is somebody like Western Copper does a mercy killing and simply acquires this company to expand its overall footprint, just in case there's something related to the Casino porphyry system on the western part of that project. Now, Eastfield itself, yesterday I added a new feature to Kaiser Research Online. I started this business in 1994, and I have trade data going back until then. And so I said, well, why don't I create 25-year charts for companies that have data going back more than 12 years? And so I've done that, and anybody who is a subscriber will be able to notice that there's now an additional very long-term chart where you can see what's happened over the past 25 years for companies such as Eastfield. And with most companies, you'll see this series of spikes where all of a sudden it goes from a penny up to 40 cents and then sort of a ski slope down again, repeating over and over again. That's the culture of rollbacks. I do not adjust these prices, so that's something that's undergone a 300 for one rollback over time with all the individual ones. Looks like it was trading at $300, 15, 20 years ago. No, I show what happens. And the chart for Eastfield, they had a big run in that 96 period to 250. And since then, it's been almost this flat-lining company, this mothership that spawns these other things, but itself has never really done anything. And I've accumulated this stock, bought a position because I see the Eastfield and the Glenn Garrett and Bill Morton team as a symbol of this dying institution. It's almost like a last hurrah. The company's flagship project is Zymo. It's been through multiple farm-in partners, but has never had a discovery hole. They've been negotiating with a major on a farm out for who knows how long. I've told them, tell them to go away and just go in there and keep it as your flagship. And if, say, Lorraine Copper, which was their other company that just got absorbed by Sun Metals, if Sun Metals demonstrates that 421 zone on the Stardust project is a big winner, well, if Sun Metals rockets to several dollars, there'll be a lot of former Lorraine Copper shareholders who will be quite happy and might actually turn into a pool of capital available to this group, which otherwise currently is not available at all. In fact, they tried to do $125,000 financing at a nickel in the past month or so, but only got a portion of it done. That is how bad the situation is, how gloomy the outlook is for this sector. Interestingly, the company has attracted Brian Fagan as a significant shareholder and indirect supporter. And Brian Fagan is the person I can partly blame for me being in this industry for all these decades. In 1983, I had a temporary job at a brokerage firm with a broker who did the IPO of Kettle River, and I watched in amazement as this stock, which came public at 40 cents, within like a month or so went to $4 based on what was supposed to be a VMS discovery, though one that turned out not to have too much depth beneath it, and the stock eventually went down. But that experience hooked me in this game of discovery exploration. Brian Fagan had another company, but by mid-90s he decided he wanted to go into the newsletter business and ran stocks and speculations during that cycle. The past decade he has been more of a private investor, and he's sort of come out of semi-retirement because he also sees in the Eastfield team this vision of the past glory of the junior exploration sector. He himself was a prospect generator, farm out type of executive, and so we got him in there. We've got myself who own these shares, but they've got a couple projects in Data and Iron Lake farmed out to Ian MacDonald, son of the late Bruce MacDonald, not the other Ian MacDonald, and Harry Lundeen, son of Lucas Lundeen. With their companies are probably using these projects as stepping stones for getting into something more advanced that can be backed by the wealth behind these families. But that work will get done on these projects, and they still have other ones cooking in the background. So for me, the Eastfield seems hopeless in a scenario where the sector is truly dying. But should, Jim, you be right that a turnaround is coming, that this time is not different, well, then Eastfield itself could prove to be a windfall payday for me.
We'll have more with John Kaiser right after the break.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome back. Eastfield seems to still have a team of toiling geologists that could finally get lucky. Tell me about a company you're stuck in that seems truly hopeless.
Jim, that company would be Tri-Origin Exploration. And we have featured Tri-Origin in past episodes of Discovery Watch. That was for the South Abitibi project, which was under option to Sumitomo. Sumo recently dropped out, so the company is back to 100% ownership. That story is in an area where the Abitibi belt, this greenstone belt, is supposed to exist, but it's under the cover of younger rocks, which have some younger leakage in it. But the quest that the leader of Tri-Origin, Bob Valiant, has always been chasing is the possibility that there are either gold systems or VMS deposits hidden in the Archean rocks underneath this Proterozoic cover rocks. And Sumitomo bought into that idea, and they used geophysical techniques to test targets, but they never really got any joy, and eventually Sumitomo gave up. And this type of undercover exploration, this is a hard sell in this market. Now, Tri-Origin is also one of these companies that has been around forever without a rollback. It has about 120 million shares, fully diluted. Its working capital bobbles between positive and negative over the different quarters as money comes in from this farm out or some small financing. But as an example of how truly difficult the market is, they tried to raise $650,000 in March at 3 cents for common stock and 4 cents for flow-through. And last week they finally gave up and they hadn't sold a single share. The stock is now offered at 1.5 cents, which is lower than what I have paid for my position. So, and the company, I mean, the reason I own this company, I mean, I followed it, since the mid-90s when I launched my newsletter. It had a good run during that period. Bob Valiant is a PhD, formerly from LAC. He's also a specialist in the LaRonde type of gold system. He and Dennis Sheehan, also from LAC Minerals, formed the company. They had projects in both Ontario and in Australia. The Australian Woodlawn project, the VMS system, was eventually spun out as a separate entity. So, I have a lot of respect for these people who have stuck in this industry, never had any super glorious successes that make them sort of the toast of the town, who have not brutalized shareholders through endless rollbacks. Again, you can that only goes back to 2000 because there was a break in it. But you can see the chart, one big run over to $20.39 in that 2006-07 period. But since then, Tri-Origin is pretty much flatlined. However, if we did get a turnaround in this sector, and they have a portfolio of projects ready for more work. Their flagship is the North Abitibi, which is on the Ontario side of the Casa Berardi break. And there they have gold intersections that have never been followed up at depth or really along strike. They have the Sky Lake project, which is farther south near the Pickle Lake area, where they also have gold intersections. But in this market here, an existing gold intersection, it doesn't mean anything. It just means that that's all there is. The glass is worse than half full, half empty. It is entirely empty. So Tri-Origin is one of those companies. It's a one-man show right now. You cannot really attract audiences with a one-man show. The Eastfield group at least has a technical team and others that can be at conferences and help them talk to people. But I've been anticipating this type of future for some time, and I developed the concept of the Share Collective several years ago. It was built by an Australian group. They messed up the first version. They've redone it so that it can scale to 1 million users. It's ready for testing and possibly relaunching within a month or so. And the problem that this space has is if Bob Valiant tries to, comes up with a great hypothesis as to what he thinks needs to be done next with North Abitibi in terms of exploration and what the outcome would be, he's fairly restricted in quantifying the size of the prize for the audience, because this sort of forward-looking statement is not allowed. It's too easy to be proven wrong. In fact, it's going to guarantee to be proven wrong, unlike in cannabis where you can say anything you please because there is actually nothing truthful or untruthful that can be said about the weed space. It's all about we may be the winner that takes all, and we're going to do all kinds of things, and who knows what magic will come in from left field to make this what looks like an also-ran company into a success story. This is not how it works in the junior resource sector. The quality of the team, the quality of the projects, and the ability to visualize the potential outcome if you put some exploration dollars to work, that is the key. And a project like North Abitibi is never going to be the winner that takes all, because there will be a finite size to how many ounces or pounds of copper going to be found in this thing. It will have a limit value based on the discounted cash flow model. It's what makes the mining exploration business very different from other businesses where you can end up becoming an Amazon or Facebook or a Google. And this, in my view, the Share Collective, when it's launched, it will allow the public to look at materials such as Bob Valiant's able to assemble, and they'll put together the dots and invent a deposit and run an imaginary mine on it, which will then spit out an NPV and a discount rate and an IRR. And then they can share that vision into a public space for others to criticize or to choose as their favorite. And this will create a feedback loop that allows the public to see what everybody else is thinking about an exploration play. And so this problem Bob Valiant has as a one-man show, who can only talk to so many people every day, and he is in his 60s. He's not like somebody in their 30s who can do this day and night. Now the crowd will be able to organically discover the play, start to follow it. There'll be a community where people can argue with each other about what does this mean, and the project's potential can be properly priced. So the space does not have to die, but in its current format, where the brokers don't play any meaningful role in telling the story anymore, where websites are pretty much meaningless in terms of how much money would you make if the company actually succeeds at what it's trying to accomplish, that can be changed with technology. And the big missing component, which is entertainment. It used to be fun in the 80s. I mean, it was fun watching Brian Fagan, get on the phone and talk to people and explain stuff about how this next hole was going to be the one that proves that the VMS deposit is there, and then hearing the rumors and all that kind of stuff. That doesn't exist anymore. The entertainment aspect has disappeared from the junior resource sector exploration game, but this something like the Share Collective can bring entertainment back. And when the millennials who have made money gambling on the cannabis momentum plays, when the cannabis momentum play eventually fizzles, hopefully they've kept most of that money, and when they discover that, hey, here is like a gaming system where you have clans and alliances and enemies all battling it out, and also in the market where you have the legalized gambling system called the stock exchange, the regulated disclosure system, 43101 and all that of the listed companies, and then you have an arena where each individual can try to manipulate the behavior of the market and everybody else. And because none of them have a real identity. None of them has any credibility that they can abuse to gain the trust of others. They have to earn it within this system. When this is built, then this sector will come back, and I continue to own these stocks such as Eastfield and Tri-Origin, and then even Aven, in the hope that this new technology will provide salvation for the junior resource sector.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.